Hi, everybody. This is Josh Jelinski, the financial quarterback. And we're being joined by one of the favorite guests of our listeners, Harry Dent. And welcome back, Harry, to the Financial Quarterback radio broadcast. And for our listeners who've not heard about your work, going back to your prediction of the demographic boom of the 90s and the 2000s, as you predicted the '08 crash. Explain your background for those who've never heard of you.
Well, first of all, Josh, I'm not an economist by training. I took everything else in college and Harvard Business School because I felt like economics and economists didn't really offer much about real life and real business. And so I started out consulting to Fortune 100 firms with Bain & Company, coming out of Harvard Business School. But then I really found that I got my calling when I started doing the same strategic work with entrepreneurial companies. I realized, you know what? I'm really an entrepreneur, and I really get along with entrepreneurs. And guess what? They're the ones that make all the innovations and really create change down the road. And so that's what really got me out of being a business consultant into an economist. I went and studied all the history, all the economic history from every angle possible with, total open eyes, no economic dogma and stuff, and came up with my own theories that, hey, new generations come up and grow up, and raise families and peak in their spending, which I could pin at age 46 back then, and now it's 47, and new technologies come about every 45 years. That's one of the biggest clocks I have. New technologies, bam, and just recently it was PCs, then it was internet, now it's crypto. People think crypto's a nothing burger. It's a baby. And 15, 20 years from now, it's going to look like the internet does today, a fully mature, everybody's got it technology. So I found that by studying demographic and technology cycles and a few other ones, commodity cycles are 30 years, that I could actually project out for any man, woman, child, business, whatever, where the economy's heading over the rest of your lifetime, not 2 years or the next presidential term or whatever. That's what most economists look at because they think, after that, who knows, anything could happen. No, everything that's going to happen in your lifetime is already in motion by these cycles, which have been proven over hundreds of years now. And so I just came up with my own kind of cycle approach and slowly became an economist. I didn't plan to become an economist. It's not the best way to get a girlfriend, So so I just kind of tripped into this. Did most of my research in the 70s and 80s, but I've been basically writing books and making forecasts ever since, particularly the late 80s on. And I was the guy that people thought was crazy because I said in the 80s, this is going to be the greatest boom in history, and it's going to last longer than anybody thinks because the baby boom is such a large generation, and they're moving up their spending cycle. And now saying people like, what do you mean? I'm saying, no, we're due for a major stock market correction and crash because ever since 2008, when the baby boomers stopped spending, which my indicators told people 20 years before it happened, when that happened, governments just went wild and they've been printing money ever since, more and more. And since COVID, they've gone crazy. So now we're in a whole different cycle where governments are just desperately printing money to keep an economy that wants to slow until the next generation comes along, and that's the millennials. And I've been saying from day one, decades ago, they would have their boom from 2024 and particularly strong into 2037. So we got another boom coming, but in between now and then, we got to wash out a lot of bad debts and a lot of excessive stimulus and craziness in the economy, and stock markets are so overvalued that this will be looked at as history as 1929 all over again.
So it's no secret, Harry, that you're a contrarian and you've been talking about a coming correction for a while now. The question is always when. You're predicting 2022, and our very own Stan Harley is predicting that as well. So when you and Stan agree, I'm like, watch out. So explain why you think 2022 will be the biggest stock market crash of our lifetime.
Okay, I was talking about these really solid cycles, and it took me a while to get how solid they are. The 40-year generation cycle, which compounds and gets stronger every other generation, every 80 years, and the 45-year technology cycle I was talking about just, here, come together. Both of them bottom together at the end of 2022, okay? I mean, so that is the biggest confluence of down events since late 1982. So I've been pointing to this for decades. The difference is we really, in normal cycles, would have seen a peak in the demographic cycle in late 2007 with the baby boom peaking, which we did, and then a downturn. Then we would have seen the technology cycle continue into about 2019, and we would already be in another big downturn. But what are governments doing? They just print. And since COVID, they got the excuse to print $5 trillion in less than 2 years. So they are desperately, exponentially printing more. But my fundamentals have said all the way back to the 1980s when I started forecasting that this boom would start in 1983 with the baby boomers. It would peak in 2007. The technology thing with the internet would peak around 2019, and we'd see the worst years of our economy, 2020 to late 2022. With all this stimulus, they push it to the limit. So I'm saying 2022 is the line in the sand between fundamentals, real cycles, and endless government stimulus, which is something for nothing policies. And anybody believes we can grow forever just because the government prints more money, either I'm crazy or you're crazy. And I don't think I'm crazy. So I think this is where it comes together. If we don't see the economy get a major correction in the next year, then it's going to be very, very hard to tell when. But my cycles have always said into late next year will be probably one of the worst years in economic history, particularly for the stock market and things like that. So we're seeing it, and we're coming up. Looks very toppy coming in here late this year. So I think it's very likely we're coming into a top here. Another thing my research has shown, Josh, and this is really crystal clear, especially in bubbles like this, that the first crash coming out of bubble, like in early 2000 when the first tech bubble peaked, the first crash will be 45 to 50% in 2 to 2.5 months. It's just like bubbles build exponentially, but they go down even harder and faster. So the only way we'll know if I'm right, frankly, is that if we see that first crash, and I think the most likely time for that is between now here in late December and the first quarter of 2022. But when we see that first crash, then you'll know it's in motion, and it'll be obvious because stocks will probably be down. My target is 2,000 to 2,200 on the S&P versus almost 4,800 today. So you'll know if we have a crash in a few months of anything that magnitude, and then you know we're going to have a rebound out of that at first, and everybody says, okay, well, now the government's doing this, and then it'll just keep going down for a couple of years like it did in the early 2000s, and the 1930 to 32 crash will be the two closest corollaries to this. So this is really the year, and so this is the time to be most cautious, but you'll know when we see the market get really nasty quick. The problem is it could already be down 20% before you realize, okay, no. So I feel like this is just a good time to get more conservative, and then if you do see this crash start to get very steep quickly, then you know this is in motion. But right now, the upside is limited after such a great 2021 year as usual, and the downside is the highest I've seen in decades. So I think this should happen pretty soon if it's going to happen. If it doesn't, then people can question my forecast. But you are walking dangerously, I would say. And like you say, I'm a contrarian. In fact, I was introduced at one conference as the contrarian's contrarian. This was a gold bug conference I was speaking at because they consider me contrary to them, and they're considered contrary. And I'm the guy that makes these calls when nobody else does and says, look out, like in late 2007 and times like that. You know, this is something real happening, and the cycles are very strong. So 2022 is the most dangerous year. If we don't see much happen this year, and I do think the upside's limited after it's so strong coming to this, then, you know, you may have missed a little bit. But, boy, if I'm right, you're going to see markets down from top to bottom in 1 year as much as 50 to 60% on the way down to 80 to 90%. This is a 29 to 32 like scenario in my historical context with all these cycles. So this is worthy of at least looking at and saying, yeah, maybe I better at least get more defensive here. And then if we do start to see this happening, get so quick. I mean, that's all I can tell you. But it is true that since governments have fought it so hard, and especially since COVID unfortunately gave central banks the excuse just to go whole hog. I mean, like literally, how much did they print between the Great Recession in 2008 and 2019? 3.6 trillion. And that's historically, that's off the charts. Never been done before. They printed 5 trillion just since COVID in the last less than 2 years. This is showing how exponentially they're having to go to keep an economy barely growing and how fragile it is.
And I've read some reports.
It's going to break hard.
And I've read some reports. We're with Harry Dent of, what is your company called now, Harry? HarryDent.com, dentresearch.com?
Well, HarryDent.com is the website, and HS Dent is the company.
Yeah, I knew it was something like that. It always reminds me of like those old ships, the HMS Dent. So, now, as we're talking about what the market may do, it's kind of weird. You're agreeing, Stan Harley's agreeing, Lacey Hunt's agreeing, Jeff Snyder's agreeing. When all these people start agreeing, who are normally a little bit different, you kind of would say, watch out.
Yeah, I agree with that, Judge. I mean, Stan and Lacey Hunt are my two favorites, and Robert Prechter's another one. He's saying the same thing, okay? These are the three people I most respect in newsletters or commentary, and there aren't many, because everybody else just, oh, yeah, you know, everybody's doing this, and other countries are doing it, and it's working out fine, and the government and the Fed won't let the thing collapse. When this thing goes down, it's going to kick the Feds, you know what, so fast they won't know what hit it. I mean, that's the way. If you build up a bubble this exponentially, you can only expect to have the rubber band come back at you that strong, and that's what's going to happen. So very few people are going to see this coming, and you just literally mentioned the same people I listen to and respect other myself, and that's about it. There aren't many others. Mainstream economists have no clue. Anybody thinks you can just keep printing money exponentially. Again, 5 trillion in less than 2 years after 3.6 trillion off the records in 10 or 12 years before that. This is exponential. This is crazy. People are going to look back at history and say, what were economists and government officials smoking? That's what they're going to say. They're going to say, this should have been obvious. It's not obvious. We're the 4 or 5 economists and forecasters that are saying Raoul Powell would be the only other guy to add to that list. Yeah, that's it. That's my universe.
It's very few.
I listen to.
You're right. It's very few.
Very few.
And I'll ask you, when we return from the break, we'll be back with Harry. I'll ask him about crypto, Eurodollar futures, Bitcoin, treasuries. What are some safe havens that he would find that someone might look at for their cash? When we return, this is Josh Jelinski, the financial quarterback. And if you call us during the break at 888-988-JOSH for the free review, that's 888-988-5674. We will give you a copy of Harry's latest book at no charge when you schedule and keep your no obligation portfolio review. Call us now, 888-988-JOSH, 888-988-5674. We'll be back after these messages.
The preceding program was sponsored by the Jelinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect affect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.